Okay, I'm here. Now I'm going to start sharing my screen. I think you guys can hear me now. I had a little bit of a problem with the video. I tried to play it and then it kind of screwed things up. Anyways, let's see if I can get my screen. There we go. All right, let's get started here. So let me start by saying welcome to the Real P&L Trading Show, where I share my real P&L on 4 accounts and share my proprietary safe wheel for free. Let me make sure the audios work good. So Rich and a few of you guys are telling me that the audio is working, everything's working now. All right, great. Be sure to post any questions you might have so I don't end the broadcast before you get your questions out. So because we're on maybe a 3 or 4 or 5 second delay. So I want to make sure that you guys do post any questions you might have about what I'm doing here or just about options in general. All right, let's talk about the earnings edge first. I'm going to start talking about the earnings edge to begin here. You can see here my earnings edge account. I traded, what did I trade last time? I traded CAT and I was down $300 on that trade. I've actually had about probably 3 or 4 losses in a row on the earnings edge, and my account balance is down to about $74.89. So here's the difference here, right? If I'm not making money with a trading system, you're going to know about it, right? I'm not hiding when I don't hide my losses. Okay, so that's the difference here on my channel versus, I mean, a lot of other channels. If I'm not making money, you're going to see it. And I'm okay with that. I mean, obviously I want to make money. But if I'm on a losing streak here with one of these systems, it's right there in front of you. I'm not trying to hide anything, okay? All right, so but let's talk about, what did I say I had that here? 74.89. Let's put that into the spreadsheet. 74.89, 74.89. And what is SPY trading? SPY, I'm looking at it, 581.84. A little lower, 581.84, a little lower than last week. You can see that the EE is vastly underperforming in 2024, but you can see I'm still up 50% since its inception in 2022. And the S&P since the beginning of 2022 is up 22%. So it's what, averaging around 7% a year since the beginning of 2022, approximately. Okay, so that's the earnings edge. Let's get into the PL5 Pro. This is my larger account, and that would be the account number 527. So let me pull that one up. This one here. Yeah, let's see. Okay, 437 to 12. 437 to 12. 437 to 12. Okay, down a little bit. 437 to 12. Okay, so you can see what the Premier Level 5 Pro is doing, and I started this in July 19, 2024. Another thing is the PL5 Pro, that's a newer updated trade plan that I started trading in July. So I have the PL5, which is a great trade plan, and then I have the PL5 Pro, which is an updated version, which I started in the middle of 2024. And you can see I started with 404,000 up to 437, so I'm up about 33,000 on this account. And I'm up 8.25, where the S&P during that same time frame is up 6.5. So outperforming. We're in a bull market. The PL5 Pro may not outperform in a bull market. So far it is here. But sometimes it doesn't outperform the bull market, but it does make money in the crash, which I did on August 5th, 2024. It makes money in the grind downs and sideways markets. So because of that, it can outperform overall. All right, that's the PL5 Pro. Let's talk about the PL5 Pro S&P variant, right? So there's a variant here. So I'm going to log into my account over here because I trade this one with Interactive Brokers because the commissions are really good. And this is only a $30,000 account. So with the commissions, they're a major factor with an account this size. So I decided to trade in Interactive Brokers. Okay, and here is the account here now. I'll refresh it just to, to show that it's real numbers. So 31,677, 31,677. So it's down a little bit. 31,677. Okay, so you can see that the PL5 Pro, this is the S&P variant, right? So it's going to go up and down with the market. It's up 5.59% since the middle of July this year, and the market's up 3.29. So it's outperforming. The goal of this S&P variant is to strictly outperform the S&P. So if the S&P is down, this one will be down less. Okay, so as opposed to the PL5 Pro, where I don't want to be down at all. I mean, so that's the difference really. The variant's going to go down with the market, but it'll outperform. Well, it is outperforming 5.59% versus 3.29%. Okay, so that's the variant, one of the variants that I run. All right, let's talk about the safe wheel. Which account is the safe wheel account? Let's pull that one up. And that should be this one here. Yeah, 59.56. 59.56. I'm trading Pinterest, 59.56. And Pinterest has just been kind of working against me in terms of the safe wheel. Like it just is perfectly kind of going down, but not down too much. So where the hedge kicks in, but it's kind of going in that no man's zone. But it is what it is. So here in 2024, you can see down 7% where the market's up 22. And you can see overall the safe wheel since 2022 up 19 and the S&P 500 up 22. But on a risk adjusted basis, outperforming because the drawdowns are only about half of what the S&P drawdowns. But nominal basis underperforming just a little bit. But we'll see how that goes through time. And I've traded this particular account right in front of you since 2022. Every trade, I have made every trade except for my $5 long hedge. Every trade I've made right in front of you here on YouTube live. Okay, so let's take a look at that account. What do I need to do? I'm trading pins, of course. Now, here I am with 200 long shares. So I've been assigned 200 shares. Now, am I going to sell any more puts here? No, I'm not going to get assigned 300 shares. I hit my limit as how many shares I can own with this system, the way that I have it designed. And I also have my put hedge. So first thing I want to do is manage my hedges. So the first thing I want to do is to ask 3 questions about this put hedge. So number 1, do I own 200 shares? Yes. So if I do, will this pay off? No, it's down. So it's not going to pay off. So you can see that I'm down $400 with my stock, and I'm down $200 with my put hedge. So my put hedge is not going to pay off. If I was up over $400 on the put hedge, I would close everything out. But no is the answer there. Is it under 100 days? No, because the depreciation gets too fast. And so no. And then is this strike price close enough to the actual price? Is it within 70%? So is $24 within 70% of 32.42? Let's see. 24 divided by 32.42. It's 74%. That's good. If it was under 70, I would have to move my put hedge closer. Okay, so that's good. And then I have my other hedge here, which is just something I paid $4 for, just to cover in case Pinterest gets some takeover bid or something and it goes to $100. You know, I don't want to lose this put hedge, lose everything here. But actually, I'm long 200 shares, so that probably wouldn't bother me too much. So what am I going to do now? I own 200 shares. I own 100 shares at the $33 mark, and I own another 100 shares at the $34 mark. So I want to try to sell covered calls at $33 or higher and sell covered calls at $34 or higher. Let's see what I can do. I might not end. I want to do it in the nearest expiration, the one that expires on Friday. So 33. Okay, yeah. I can sell 33. How about 34? Okay, so I am able to sell here because I want to get at least what is it trading at? 32. I want to get at least like 32, 33 cents. So here, this 34 isn't really good enough. It's close. I'm probably going to sell both of them. I can sell one here at $34, and I'll probably sell one at $33.50, and I can collect enough premium there. And if I get called away, I won't lose any money because I'm long at 34 and I'm long at 33. So I'm going to do two separate long calls. I don't think I've ever done that before. Well, let's just do it. So I'm going to do one here, $29, just one, selling the call. Okay, that went through good. Now I'm going to do this one here. So I have my 33, and I'm going to want to do one out of the money or at the money, and I'm going to do the 33.50. I think we're coming into earnings, so that's why these are juicy premiums, which is good. Which I'm glad that I have the opportunity to sell some nice premium. So here I am filled here. So this is for my 100 shares that I sold at 34. If I get called away here, I'll be fine because I'll break even on the shares, but I'll make money with the premium. This one's for my 33 call. 33. I got assigned at 33. So if I get called away here, I make an extra 50 cents plus the premium I sold. So I sold 2 covered calls against my 200 shares right there. Okay, so that's easy enough. And then as far as sizing, because I have between $5,000 and $10,000, I use I use 3 put hedges, and I trade one 100 share increment at a time. Obviously, I'm in 200 shares, so I did 2. I won't do 3. So that's the sizing. So with the safe wheel, I have everything sized out and good to go. All right, let's see if there's any questions or comments here. Shovel said he was first, and he was right. And he also says, hit that like button. Yeah, hit the like button if you have the same kind of beliefs that I do, which is share your P&L, your net liquidation. Instructors should share their net liquidation to prove their credibility. And even if they're down, like I'm down in one of my systems, I'm still sharing my net liquidation, right? I'm not hiding that. And if you want to I'm trying to change the industry, and I'm trying to get more people to do what I'm doing. And one way that you guys can help is to hit the like button, because in a roundabout way, that'll help give me more exposure, and therefore other people will have a different view, and they will ask their instructors or potential instructors for their P&L, and we can change the industry. Okay. All right, I've got some comments about the audio not working at first. All right. Will, is there anything particular with the market and the company's earnings that hurts the earnings edge? No. The reason why I use the earnings edge to go into earnings is because I want to buy something that won't depreciate. I want to be long something that doesn't depreciate as normal as other time periods. But we really do need a move. We need a move to happen before earnings. We need a move that's out of the ordinary or that's unexpected. And about half the time that happens. Half the time the move is not as much as expected, and half the time the move is more than expected. So that's kind of how the earnings edge works. And when it's more than expected, the earnings edge can capitalize on that. Show the strike price on the $5 call, please. Oh, sure. So here, 36.50. I think next week is when earnings are, the 7th. So this call will expire before earnings. Shovel, cool Carl, your thoughts on trimming the PL5 back until after the election? I've trimmed back some and won't add until after the election. Well, the thing is, I am not taking any binary events into an account at all when I trade the PL5 Pro. Like, that's not part of the trade plan. A binary event is something that's going to happen. You know it's going to happen. You're probably going to have either a vol spike or a vol decrease. You don't know which one's going to happen. Therefore, why would I make a decision based on that? Like, I don't know. So I just keep things mechanical, and I don't use any fundamental analysis or technical analysis to make my decisions. So I'm running the program as if there's not an election coming up. Maybe a big move will happen because of the election, and the PL5 might benefit from the big moves. So it may actually be smart to be in with Carl's system. True, I mean, if the market crashes like it did August 5th, 2024, I was able to capitalize on that with the PL5 Pro. Or if the volatility drops, because the VIX has been relatively, let's see what it is. It's at 19. I would think if there was not an election coming up, it'd probably be around 15. You know, it would be 14. It wouldn't be as high. So I think this VIX number here does reflect the upcoming election. So if the election goes smoothly and somebody gets elected and there's no big surprise, I'm sure the volatility is going to drop down after the election. But if they can't figure out who's going to win, and it's still up in the air, and there's all this unpredictability, then the volatility might rise significantly. We just don't know. Shovel says that's his thinking. Okay. Will says this is the first time I've seen us sell two calls like this when it's not a blaze of glory trade. Me too. I think this is the first time that I've sold two separate calls on each of my 100 shares. I don't think I've ever done that before, which is nice. Nice premium, right? Mad Mike, any chance of the PL5 Pro opening up? Yes. Go to the link in the description and see how you can get access to the PL5 Pro. It's not open right, the doors aren't open right now, but get on that list, and that's the best thing to do right now. I'm kind of changing up my marketing plan to where, like I think I said this last week, instead of doing like letting 20 or 30 people in at a time, I might just let in a couple at a time per week. So I'm in the process of kind of getting that organized. Javier, it will be breaking the rules a little bit, but IV is so high that if you sell the 33 or 34 strike on November 8th instead of the 5th, you get 3 times more juice. Wouldn't that be better? Actually, it's not a bad idea, and if you wanted to do that, that would be a pretty good idea to do that. Maybe next week I'll be able to do it again. So I'll be able to keep everything that I sold this week and get more next week. But yeah, that's a great idea, and I don't have anything against doing something like that. It is the only reason really why it's against the rules is because you got to keep the rules. For me, anyways, the way I think of things is you got to keep those rules like really black and white and just stable. And if you have these little, every once in a while, little changes, then it kind of gets really confusing. But I like that idea a lot. Will, I didn't get why we sold the 34 call this week. Well, I guess because I was assigned at 34. And so I'm looking at just that batch, right? Just that 100 shares at 34. Just forget about the other 100 shares. And what do I want to do with those? Well, I want to sell them this week, and I want to sell them at $34 or higher, and I want to get at least like 34 cents. But I did sell it for under 34 cents, right? So what did I get, 29? I should have sold it for a little more, but you know, I'm going to take that premium, even though technically there's going outside the rules just a little bit right there, where I took 29 cents instead of like 34 cents. $5. But if I wanted to be strictly black and white, then yeah, you're right. Well, I would have not sold those. Well, this is one of those weeks where I look at the risk graph, and the downside risk makes me panic to buy a $5 put instead of the call. I like that you guys have variance to this. Yeah, I mean, I have the black and white rules. Sometimes I don't even follow those exactly, because right now I sold for a little less premium than what I should have that the rules state. But yeah, I mean, if you feel like you want to buy a $5 put, I mean, it's $5. Yeah, I don't have an issue with that and coming off with variants and stuff like that. I like the fact that you guys are coming up with variants and ideas, because those are good ideas. Avery's mentioning please hit that like button. And Will, the money per day might be more when we collect the premium next week. Correct. Yeah, it might be. It just depends, I think, on where pins goes. If it stays where it's at, we'll probably come out ahead. If it goes higher, I'll get called away. But either way, you just don't know. You just don't know what's going to happen. Ian, would you avoid trading the earnings edge during election week? That is possible, because I don't like buying, because when you're trading the earnings edge, you're basically buying premium. I mean, you are selling premium against it to kind of cover the cost of buying that premium. But I don't like to buy, like when the August 5th crash happened, it was on a Monday. I didn't trade the earnings edge because the possibility of the volatility being up and then falling could really hurt the trade. So yes, sometimes I do kind of take like the current volatility regime into account with the earnings edge. I don't know, during the election, I mean, you don't know. Maybe it's going to be so close that they won't be able to predict who's going to win, and then that creates all this uncertainty, and then the volatility rises, and then you come out ahead. So it's hard to predict. But when the August 5th crash occurred, I kind of, like, the VIX spiked all the way to 65, and then it was making its way down. And from there, I didn't really want to get involved with that. It seemed like the event already occurred and it was already making its way down, as opposed to the election. You don't know. There could be more volatility coming our way. So I don't think I'm going to avoid the earnings edge during the election. Hey. Will, the Carl cinematic universe is going multiverse with all the variants. Yeah. Yeah, I'm definitely a universe as opposed to a multiverse. One of the things I like about the PL5 Pro as opposed to the PL5 is the PL5 Pro has a lot of variants. So I have the black and white rules set, ready to go. This is what I do. But then there's some variants in there too. So if you want to tweak this, or if you want to tweak that, you want to do something a little different, here's an idea, we back tested it, here's our results, here's a variant that you could do. So that's one of the things about the PL5 Pro that's nice too, those variants. Can you give us an elevator pitch for your new book? Well, I just like to say I've been able to figure out how to trade for a living, right? And it took me 25 years to do that. And I took all that knowledge and I put it in this book. So that's my elevator pitch. Okay, let's see if there's any other comments or questions. All right, I don't see anything here. So in parting, what I like to say is, if the P&L is not real, what else are they trying to conceal? Let me try. I have one more comment here. Let's go with this before Carl, you should work with the new administration after the election. You're the most transparent in this business. Thank you. I appreciate that, and I am transparent. And if I am not making money, you're going to know, right? Build your CNC. What are your thoughts on MSTR, MSTX? A lot of hype. I think, I don't know. Like, you're probably asking me, are those stocks, or I'm assuming they're stock symbols, are they going up? Are they going down? I'm assuming that's what you're asking me, but I'm non-directional, right? So I don't predict what the market's going to do. I capitalize on selling premium, and I have a proven edge. And what is this? Carl, I've been F. Okay, I'm not sure what that means. Build your CNC. The premium is very high. Micro strategy. Okay, the premium's high probably has a reason. There's probably some type of binary event coming up, and you know, maybe the earnings edge would be something to deal with that. But as far as directional, I don't know. I don't predict direction. I don't think anyone can accurately predict direction in the short term and make money and put their money at work and make money around that. There might be a couple people here and there, but so far I haven't really found any. There's one that I think maybe, but I'm not 100% sure, but so far it looks like it, but I don't know. But I don't think that it's a very repeatable process. There's been a lot of studies done. In fact, if I'm putting out I'm coming out with a new video series, and I'll talk about that in detail in that video series about day trading and the statistics on that. Okay, I appreciate you guys, and I'll be back next week. We'll see you then.